Hello, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. I want to take a look at the euro versus yen, as there's some interesting technical levels that have been in play, and give traders a clue as to the bias and risk associated with trading that currency pair. I'm going to focus on the hourly chart here, and what we've seen over the last few days is a move to the downside. That move to the downside was started after the pair actually retraced back above its 100-day moving average. That's this top side blue line at 138.125. Last I guess that would be Tuesday and Wednesday. The price moved above the 100-day moving average here and here and here again. Price should have gone higher, extended to the upside, but it didn't. The market failed here, and then had a bigger fail here to the downside. The buyers gave up, and buyers turned to sellers, and the price moved to the downside. The move lower saw the price move below the 200-hour moving average here, but again we saw a failure, and the price rotated back up to the upside, taking out the 100-hour moving average above as well, with another little failure here. But once the price moved below that 100-hour moving average, we started to see sellers lean against that level, pushing to the 200-hour moving average. And then on trading yesterday, we saw the price move away from the 200-hour moving average, trending more to the downside here. On the downside, we did break below this lower trend line. There seems to be a lot of failures in this currency pair, which is something interesting to note, so be aware. But the price couldn't stay below that trend line, and when we moved back above it in trading here today, we started to find support against the old channel trend line, and that gave the buyers the go-ahead to push to the upside. Now, one failure that didn't happen was the break above the 100 and the stall against the 200-hour moving average, and also this trend line right here at the highs today. That is key. And key for the bias going forward, because we have since moved back below the 100-hour moving average, and that tilts the bias more to the downside in the short term. The buyers had their shot. They couldn't get above the trend line, couldn't get above the 200-hour moving average, and the prices moved back to the downside. It will take a move for traders looking for lower levels. It will take a move back above the 100-hour moving average, the 38.2% retracement of this trading range, and the 200-hour moving average to turn the bias back to the upside, and trend line as well. So all those levels, those 1, 2, 3, 4 levels, need to be broken in order to tilt the bias back to the upside. Absent that, and the sellers are still more in control with this swing area down here as the next downside target, followed by the old trend line through here, and our low price that we saw here and here would all be targets on the downside for further downside momentum, if again these levels cannot be taken out. So there's an interesting view of the euro versus yen. We'll see how it plays out, but the technicals are certainly helping to drive the price action in this currency pair. Good fortune to trading. My name is Greg Mikulowski. Talk to you soon.